Imagine this scene. It's 1944. Representatives from 44 allied countries are meeting at the Mount Washington Hotel in Bretton Woods, New Hampshire. In that room, they're about to make a choice that will influence the world's economy for the next 80 years. Britain, which had been the top financial power for over 200 years, was completely broke. Its national debt had jumped to 249% of its gross domestic product. After two terrible world wars, the empire that once controlled the oceans was financially drained, and everyone there knew it. So, they did something rare in history. They switched the global reserve currency from the British pound to the American dollar. But this wasn't just a simple money swap. It was part of a repeating pattern that's happened for more than 500 years. A cycle of growth, success, stretching too far, and then downfall. Every major world reserve currency has gone through this same process. And right now, the US dollar is showing the same warning signals that appeared before the collapse of the previous four currencies. To see what's likely coming next, let's look back in time. In 1450, the Portuguese real became the world's first real reserve currency. For about 80 years, Portugal led global trade. This wasn't just good luck. Portugal changed how people navigated and traded by finding new sea paths to Africa, Asia, and the Americas. After the Ottomans took Constantinople in 1453, the old spice trade routes were blocked by unfriendly forces. Portugal solved this by sailing around Africa, starting a new era of exploration. Lisbon turned into the main center for world trade. The Portuguese real was accepted everywhere, from Europe to Asia. At its strongest point, Portugal's empire covered Africa, India, Malaysia, Japan, and even parts of China through Macau. But as often happens, success led to overdoing it. Keeping military bases on four continents emptied Portugal's money reserves. Rivals like the Dutch, British, and French became tougher competitors. Then, a crisis over who would rule the country in the 1530s made things unstable. By 1580, Spain took over Portugal in what was called the Iberian Union. The Portuguese real had controlled trade for 80 years, and then it vanished, replaced by Spanish silver. Spain's rise started with finding the richest silver mine ever high in the Bolivian Andes in 1545. This mine, called Potosi, produced almost half the world's silver from 1575 to 1635. Spain made coins called pieces of 8 at Potosi's mint, marked with a P. These coins became the first truly worldwide money. The Spanish dollar was the most reliable and trusted coin in the Western world from the 16th to the 19th century. It was even used as official money in the United States until 1857. Spain's control lasted about 110 years, from the 1530s to the 1640s. But then the same old problem showed up, stretching too far and huge debts. King Charles I left his son Philip II with a pile of debt, 36 million ducats, plus a yearly shortfall of another million. Philip II couldn't pay Spain's loans 4 times, in 1557, 1560, 1575, and 1596. All that new silver from the Americas caused big inflation. Prices in Spain went up 4 times during his rule. When silver production dropped by half under Philip III, Spain's economy fell apart, leading to more bankruptcy in 1607. By 1641, the Iberian Union broke up and Spain's money power ended. A new force was growing, the Dutch Republic. In the 1600s, Amsterdam became the top financial center in the world. The Dutch guilder, supported by new ideas and trade, turned into Europe's unofficial reserve currency. The Bank of Amsterdam created smooth, reliable ways to handle international payments. Dutch traders and investors invented modern finance. They started the first stock market, marine insurance, and new tools like credit notes and shares in public companies. From 1642 to 1720, about 78 years, the Dutch guilder led world trade, handling more than a third of all global deals. But even the Dutch made the same mistake. They spent too much on wars, especially the Fourth Anglo-Dutch War from 1780 to 1784, which left them bankrupt. The Dutch East India Company failed under the pressure of fighting Britain. By the late 1700s, Britain had taken over. The pound sterling, backed by factories and a huge colonial empire, became the next global reserve currency. For over 200 years, from the 1720s to 1944, it ruled world trade longer than any modern currency. At Britain's peak, more than 60% of global trade was done in pounds. London was the main spot for insurance, goods, and investments. The gold standard made the pound even stronger, and after a big recoinage in 1816, Britain's money was seen as the most stable anywhere. By 1922, the British Empire ruled 458 million people, 1/5 of the world's population, and a quarter of its land. Britain's financial strength seemed unbeatable. Then the usual decline began. World War I raised Britain's debt from £650 million in 1914 to over £7 billion by 1919. World War II was worse. By 1945, government debt hit 270% of GDP. Britain won the war but lost its money crown. This brings us back to Bretton Woods in 1944. Over 700 delegates from 44 allied nations met from July 1st to July 22nd to fix the world's financial system. Their deal created the International Monetary Fund (IMF) and the International Bank for Reconstruction and Development, now called the World Bank. The Bretton Woods system linked every big currency to the US dollar and the dollar to gold at $30 per ounce. The shift from pound to dollar was official. For the next 25 years, the US dollar was king, until 1971 when President Richard Nixon stopped letting dollars be exchanged for gold. The gold standard ended, but the dollar didn't crash. Instead, it got a new support: oil. After the 1973 OPEC oil crisis, the US made a deal with Saudi Arabia. In return for US military help, Saudi oil would be priced and sold only in dollars. By 1975, all OPEC countries agreed. This created the petrodollar system. Since everyone needed oil, everyone needed dollars. This fake global demand let the US run huge deficits that would destroy any other country's money. For years, dollar power was unchallenged. At its high point in 2000, over 70% of world foreign exchange reserves were in dollars. But now things are changing. By 2024, that dropped to 57.8%. Foreign investors' share of US Treasury bonds fell from over 50% during the 2008 crisis to just 30% in early 2025. De-dollarization is speeding up. The BRICS group, Brazil, Russia, India, China, and South Africa, has grown to include Egypt, Ethiopia, Indonesia, Iran, and the UAE. They're building financial systems that skip the dollar. As of 2025, 10 BRICS members and 13 partners are creating the BRICS Bridge Payment Network to handle deals with central bank digital currencies. Meanwhile, America's own finances are struggling. As of March 6th, 2025, U.S. public debt is $29 trillion, plus another $7.4 trillion in government holdings, totaling $36.4 trillion. That's 124% of GDP. And here's that pattern again. Portugal, Spain, the Netherlands, and Britain all followed this path, lasting 78 to 220 years, with an average of about 95 years. The US dollar has been the reserve currency for 81 years since Bretton Woods. We're close to that historical tipping point. Every reserve currency goes through 4 stages: rise, peak, overextension, and collapse. Stage 1, rise. A country becomes dominant through new ideas, like in trade, finance, or military power. Portugal mastered world navigation. Spain filled the globe with silver. The Dutch created modern finance. Britain's factories changed global trade. America grew strong after World War II with its industry. Stage 2, peak. The currency becomes almost universal, used in over 60% of world deals. The empire feels unbeatable. Stage 3, overextension. Problems start. Huge military spending, growing debt, and lower productivity. Portugal spread across 4 continents. Spain defaulted many times. The Dutch went broke fighting Britain. Britain's debt reached 270% of GDP after the World Wars. Today, the US has 124% debt and spent $8 trillion on Middle East wars alone. Stage 4, collapse. The currency loses trust and power moves elsewhere. Every empire has faced this. What comes next? History gives hints. Portugal never got back its power after Spain took over in 1580. Spain, with all its American wealth, fell into long decline. The Netherlands stayed rich but became just a local power. Britain, still wealthy, lost its empire and global lead after 1945. By the 1950s, 55% of reserves were in sterling. Within 20 years, that dropped fast. Britain's era ended and America's began. But these shifts don't happen quickly. Britain's fall took decades. The US passed Britain economically long before the dollar took over. The same slow change might be happening now with China and a more balanced world. Every reserve currency lasts about 95 years on average. The US dollar is at 81 years. The signs are clear. Falling global share from 70% to 58%. Less foreign demand for treasuries. BRICS options growing. Petrodollar deals weakening and too many military bases. 900 in 130 countries. The cycle that has shaped 500 years of economic history is repeating. The big question is how fast this change will happen and who will lead the next era. Will it be slow like Britain's drop or quick like the Dutch fall? Will one new power take over, or will we have a world with several currencies sharing power? History doesn't copy itself exactly, but it echoes. And if the echo holds, we're near the end of the dollar's rule. If this video helped you understand, please like, share, and subscribe to the channel. And tell someone interested in how money, power, and history keep circling back.